Hey guys, today we're going to be talking about the 6 best Vanguard ETFs that you can buy and hold forever. Now, these ETFs are going to be from all shapes and sizes. They're going to have low costs, great holdings, and make a great portfolio. They can also make you a millionaire, a multi-millionaire, and help you to retire early and hit financial independence. So today we're going to be taking a look at these. We're going to break them down and see which ones maybe you want to add to your portfolio. Hey guys, my name is Steve, and I run the Frugal Expat website, where we try to help people to save more and invest better. So in today's video, like I said, we're going to go over 6 best Vanguard ETFs to buy and hold forever. Alright, let's start off with our number 1. Our number 1 is going to be VTI. Now, VTI is the Vanguard Total Markets Index Fund ETF, and this holds every single stock, the US stock market. That's great news, because if you want something simple, you want something that you can just buy and hold forever, VTI is one of those best. Now, this ETF does have an expense ratio of 0.03%, meaning it's going to cost you about $3 for every $10,000 invested. Now, it's a great one that holds some of the top companies on the US stock market. It's got Apple, Nvidia, Microsoft, Google, Amazon, Meta. It's got Berkshire Hathaway, and these are just some of the best and top 10 holdings that it has. Now, with this ETF, it's got a good 25 to 30% of tech, so if you want some growth, this has got growth. Now, it's got a dividend yield of about 1.38%, so the dividend yield's not too high, so this is not a dividend ETF, it's just a total stock market ETF. It's got large cap, mid cap, and small cap holdings, and this is just something that maybe you may be looking into. So when you're looking at creating maybe a core, maybe something that could help create your portfolio, VTI is one of the best ETFs that Vanguard offers. Now, it's been around for a good long bit, and that means it's got pretty good performance over that long term. Now, the 1-year performance hasn't done so well, market influxes, but let's take a look at those performances. Now, 1-year performance is going to be about 9.34%, with 5 years being about 15.10%. And 10 years doing about 11.54%. Now, these are great numbers, because if you look at it, I mean, 5 years doing an average about 15% and 10 years averaging about 11.5% over the long term, that's great news. Now, if you subtract 2 to 3% for inflation, you could get a good real number. Now, the US market on average has done about 10 to 11% for the last 100 years. So this is doing pretty good for the last 10, 15 years. So if you're looking for a good core, VTI is a great one to buy and hold. It's got a cheap expense ratio, it's got a great holdings, and it's a good one to kind of build your portfolio around it. All right, let's get on to our next ETF. Our next Vanguard ETF is going to be VUG, and that is the Vanguard Growth Index ETF. So when we're trying to create a great portfolio, we may want to add a little bit of growth, and that's just going to help juice the portfolio to continue to have it grow for the future. Now, VUG is a great ETF because it's got growth of funds, it's got great tech, and it's got some good performances over the last 1 year, 5 years, and even 10 years. And so those are good news for you. If you're looking to grow your portfolio and you're looking to buy and hold a great Vanguard ETF, VUG fits all those measurements. It's got companies like Apple, Meta, Nvidia. It's got a great expense ratio of 0.04%, meaning it's only going to cost you $4 for every $10,000 invested. That means it's cheap, it's low cost. Now, the dividend yield is quite low at 0.51%, but we're not looking for dividends here. We're looking for growth, and this is the one. It's got about 169 different holdings, with about 49% of those all in tech. So we're looking at growing our portfolio. Now, the performances for VUG are 13.28% for the 1 year and 16.78% annually for the last 5 years, with 14.3% over the last 10 years. So those are some great numbers to look at. Now, like I said, we're looking at VTI, and VTI was doing about 11.5% over the last 10 years, and VUG is doing about 14.5 to 15% over the last 10 years annually. That's great news if you're looking to grow your money. If we put in $10,000 and we wanted to get it bigger, this is a great ETF to grow it to the max level. Now, if you were to invest $10,000 with VUG, that money over the long term, if you're getting about 14.37% every year for the next 10 years, that would come out to a little bit over $38,000. Think about that. Almost $40,000 just putting in VUG without even investing an extra dollar into it. So that's great news to you. So if you continue to kind of buy and hold VUG, you can grow your portfolio for the long term. All right, let's get on to our next ETF. Now, our next ETF is going to be one that is probably going to be talked about a little bit more in this next year, which is VXUS. Now, VXUS is the Vanguard International Index ETF, and this ETF kind of tracks all the international companies. So if you have VTI and you combine it with VXUS, you'll have all the companies in the world, and that's pretty crazy to think about if you wanted to do it like that. Now, some people may think that, internationals haven't done well in the last couple years, and that's true. The US stock market has been dominating, but you never know. The internationals can dominate in the near future. Beforehand, the internationals have done a little bit better when the US stock market wasn't. So it is always good to have maybe a little bit of internationals in your portfolio. You can have maybe anywhere between 1, 5, in even 10% of internationals in your portfolio, just in case, the US market tanks. And we can see that this year. Right now in the US market, you have the S&P 500 down 4.5%, while internationals, as in VXUS, is up about 8.6%. That's great news if you're looking at, having some internationals in your portfolio. Now with VXUS, you're gonna have some great companies like Taiwan Semiconductors, you're gonna have Nestle, Toyota, you're gonna have Samsung. These are some great companies that you may want in your portfolio, but you can't buy them on the US stock market, or you can't have them in VTI, and so you want to have this as a part of your portfolio. Now it's got an expense ratio of 0.05%, which means it's only gonna cost you about $5 for every $10,000 invested. Now the dividend yield is quite low, it's sitting at about 1.21%, and that's probably because, not all companies are giving out dividends. It's got about 8,600 different companies, so that's a lot of companies, and so you're getting a good bit of everything in the world. Now, this may not be the international fund you may be looking at, but if you're looking at Vanguard funds, this is the best Vanguard ETF that you can buy and hold. There are other international ETFs, but this one is just a great all-around ETF that you can buy and hold. Let's talk about some of the performances over the last couple years. In the last year, it's on about 10.57%. In the last 5 years, it's averaged about 10.57%. And in the last 10 years, it has averaged 4.96%. Now, those last 10 years is kind of poor compared to the S&P 500 or compared to VTI or VUG, but with the last 5 years and the last 1 year, you're seeing some great growth through the international funds. That's because, things go on in the world and maybe those will grow faster than the US market and it'll kind of even out at some point. And so it's always good maybe to have some good internationals a part of your portfolio. All right, let's go on to our next ETF. Now our next ETF is going to be VNQ, which is the Vanguard REIT ETF. So this has got a whole bunch of different REITs within this portfolio. It's got about 162 different holdings, and with these REITs, it's gonna pay you out monthly based upon the dividends that it's receiving. So a REIT is a real estate investment trust. So these are companies that own property. One of the companies is Simon Properties, and Simon owns a bunch of malls. Then you have public storage. If you need things, you store it in public storage or other storage facilities and units. And these are just different companies that are part of VNQ. And you got one of the best ones, which is Realty or O, and that's a great REIT. And so what happens is they are going to pay you dividends, which is every single month. Now these are taxed at a more non-qualified dividend rate instead of a qualified like a dividend ETF. You'll be getting income every single month from this ETF. Now the dividend yield is going to be 4.17%, which is a great dividend yield. It's kind of compared to some of the other dividend ETFs on the market, and you're just getting it every single month. So it's like a rental. You rent out your units, your house, your apartment, and you get money back from it. That's kind of like what this REIT is. And so that's just good news for you, because if you're looking for some income and you're looking for something that is a little bit different than a dividend ETF or different than a covered call ETF, then VNQ is a great REIT to hold it in your portfolio. Now, like I said, it's only got 162 holdings, and the performance is probably not going to be like a growth ETF or dividend ETF. It's going to be quite low. So here are the performances over the last year, 5 years, and 10 years. Last year is going to be about 13.19%. The last 5 years is going to be 6.98%. In the last 10 years, it's averaged 5.13%. Now, with rates going down, interest rates going down, that means the price of these REITs are going to go up higher because they're going to have more money to invest in their properties. And that's good news for you. So if you're looking for adding some income based things when the tariffs are going on and when the market's up and down, you know, a good REIT could be something you buy and hold in your portfolio. Now, I do not own any V&Q, but it's just a great Vanguard buy and hold ETF that you can hold in your portfolio. All right. Let's go on to our next ETF. Our next ETF is going to be VYM, which is the Vanguard High Dividend ETF. Now, this ETF has been talked about on this channel before when I've talked about dividend ETFs, and I did a ranking of some of the best and worst dividend ETFs that you could buy and hold. And so we'll leave a little link up there just so you guys can take a look at it. Now, VYM is a great dividend ETF because it holds some great companies like Johnson & Johnson. It holds Home Depot, Coca-Cola, some of these great things out there. Now, it's got different kinds of holdings, like it's got financials, it's got tech, consumer defensive, it's got healthcare, and these are some of the ones that, you know, just create some great dividend yields for you. Now, the dividend yield is sitting at about 3.2%. So if you're looking for something that's got a good dividend yield on this list and you wanted a Vanguard dividend ETF, well, VYM is one of the best out there. Now, it's got a good performance of about 8.5% over the last year, 13.31% average over the last 5 years, and 9.33% over the last 10 years. Now, this is pretty good. I mean, when we're talking about you get a 3% yield, you're giving dividends, and you're getting a great dividend ETF that's at a low cost. The low cost is sitting at 0.06%, so it's only costing you about $6 for every $10,000 invested, and you're getting about 540 different holdings. So that's amazing news. So if you're looking for a great Vanguard dividend ETF, VYM is one of the best out there. So take a look at this one and see if you want to add it into your portfolio. All right, we're getting down to some of our bottom ones. We're going to our last one, and our last one's going to be VOO. Now, VOO is the S&P 500 ETF. It is a great ETF. It is actually the second largest ETF on the market. Now, like I said, it is the S&P 500 ETF, so it holds the top 500 companies on the US stock market. So those are, you know, the usuals: Apple, Microsoft, Nvidia. It's got Berkshire Hathaway and some others. Now, these are some great companies that you could be holding for your future. Now, when I took a look at seeing which one is better performance-wise, VTI versus VOO, well, VOO comes in first because it's got more of a concentration in those top companies on the US stock market. VTI's got 3,600 companies. VOO has 500 companies. So you got more money concentrated in VOO. So let's take a look at those performance over the last 1 year, 5 years, and 10 years. Now, the first 1 year has a 10.13% average, with the last 5 years doing about a 15.61%, and the last 10 years doing 12.19%. So that's great news. It does outperform VTI, but when we're looking at our portfolio, we got to see what matches what we want. Like, if we just wanted to hold one ETF that holds everything, VTI would be it. If you wanted to mix and match, have a VOO with a small cap ETF, and maybe you wanted some growth and some dividends, this could be a great core as part of your portfolio. Now, some other ETFs you may be thinking about when you think about Vanguard could be like VGT, VIG, and there are some other great ETFs out there, but today I wanted to talk about these top 6 ETFs. And if you want my last video, I talked about some Schwab ETFs and funds, so take a look at that. Let me know what is your favorite Vanguard ETF and just leave it down in the comments. And if you like this video, make sure to hit that like button and subscribe, and I'll continue to create great content to help you out. My last video I talked about Schwab funds, so take a look at that, and I'll see you on our next video. I'll see you.